Hello traders, the title of the video is how to trade the beast of the currency market like a pro. We're on a yearly chart of the British pound Swiss franc currency pair, and we're going to start what we call a technical analysis looking at the chart alone, alright? So what we are calling the beast of the currency market is the British pound Swiss franc currency pair. So if you are trading Forex and you want to trade the British pound Swiss franc currency pair, you want to understand exactly what you are doing and also the risk that is attached to this currency pair. It's quite challenging, quite difficult, for new traders and beginners and traders that are struggling to trade the British pound Swiss franc currency pair. The risk is quite high, so one can decide to stay away from the British pound Swiss franc currency pair unless one has the qualifications, so to speak, to trade this currency pair. Alright, so it's more for advanced traders, professional traders, traders who knows exactly what they are doing in the currency markets. So having said that, if you know exactly what you are doing, you can trade the British pound Swiss franc currency pair. One more thing you have to understand that the brokers will ask you for more, stop loss. Alright, so as soon as you enter the trade, you may see minus 10, minus 20, depending on the broker that you are using. Alright, so this is it. Let's begin the technical analysis of the beast of the currency pair. It moves fast. It's a giant in the currency market. Big, friendly giant. Alright. So on a yearly chart, what can we tell traders? We will tell traders that the price is now below the closing price of 2016. The closing price of 2016 is at 12577. 12577. The price below 12577 is looking more bearish than bullish. It's looking more bearish than bullish. So price close at 12577. Now the price is at 12442. Therefore, we will give priority to bearish signal below the closing price of 2016 at 12577. This is what the professionals are doing now. You can see that at the beginning of 2017, they sold it down all the way to 12111. That's the low of 2017 so far. But it's finding a bit of support. You can see that 2017, it got a bit of tail. But it will become a little bit more bullish if it goes above the closing price of 2016 at 12577. Very, very important. Another key level that we need to highlight here is the median line of 2016. That median line is near, I'm not saying exact level, it's near the level of 13285. 13285. So apart from the 12577, one should also remember 13285. Put those key levels on your charts. Alright. Another thing we need to mention here on the yearly chart, we can see that last year we got a bit of tail. You see the tail of this candle here, indicating to us that we have a support. Good news is that in January, the price went down to this level, in this zone again, and found a bit of support, so we got a bit of tail. So we can see that there are few buyers in this zone. Alright, so that's all we can say on the yearly charts. Talking about a top-down trading method, we now go to the monthly charts, and it becomes more interesting on the monthly charts. Alright, very interesting, because you can see here, as I explained to traders at 2-4 Elliott wave 2 channel, the minimum price move is free. So if a financial instrument goes down in 3 moves, alright, that is, there is a possibility that we may see a reversal unless the price break below the low of that third move. So first move, second move, third move, or minimum price was free, possible reversal after 3 moves unless the price dip below the low of the third move somewhere here. Okay, so you see this before 1 2 3, it changes direction here, goes up. All right, here again, look at this session here on the monthly chart. We see again minimum price move is 3 on the monthly chart. 1 2 3. Okay, here we are. There is a support in this zone. As you can see, the tail of those candlestick bar here. But you see the tail here. This is support zone. The price went into that support zone. It's finding a bit of support in this zone. All right. So 1 2 3. So at this point in time, we will be putting this a giant of the currency market, the British pound Swiss franc, on our bullish watch list, and monitor carefully, all right, the trading setup that are appearing in that zone. Gently, because it's a beast, all right? It's a beast, okay? So now, so 1 2 3, we again in the same zone. It bounces up a bit, all right? It breaks a bow. So again, on the monthly chart, before I forget, the first long-term equilibrium price level that we must not forget in 2017, if we are trading the British pound Swiss franc, is at 12448. The current short-term equilibrium price level that we must watch as a day trader, swing traders, up to the end of the first week of March is at 12384. So right, the pink line is the first long-term equilibrium price level, and the turquoise line is the current short-term equilibrium price level up to the end of first week of March. But the long-term equilibrium price level, one should not forget it throughout 2017. All right. So because we are below the low of 2016 at 12577, if the price finds support above the first long-term equilibrium price level, we can be bullish. So we can be bullish above the 12448 up to the 12577. Okay. So the reaction of the price, so 1 2 3, you see here it bounced up. Here we see 1 2 3. Will it bounce up again? So at this point in time, we will implement what we call a top-down trading method. The price breaks above the long-term equilibrium price level, is now retesting it here on the monthly chart. So the best approach is to wait until this candlestick bar of February 2017 is closed. Then we'll come back and check whether it's now ready, okay, for us as a bullish trading setup, and then we will implement a top-down trading method to trade it, a multiple time frame trading method to trade it, monthly chart, daily chart, hourly time frame, or weekly chart, 2-hour time frame, 15-minute time frame, or daily chart, hourly time frame, 10-minute time frame. All right. Okay, so that's what we see on the monthly chart. So do not forget those key levels, all right, on the monthly chart, and also the price structure 1 2 3. Okay, going one more time down, talking about top-down trading method, we are now on the weekly chart. So on the weekly chart, there is a trend line here that you must put on your chart. So put it like this. Pew, here it is. There's one bearish trend line, put it on your chart. We want to know where are the key support and resistance level, and where are the trend lines, okay? And this one also here. Pew. All right. So put those two trend lines on your chart, okay? The red trend lines on your weekly chart, all right? So what's happening here? The price finding a bit of support right here on the weekly chart. We can draw a trend line like this. Can you see that? This point. So which week is this? The week of what? That's the week of the 4th of November 2016. That's the low, and also the low of the week of the 20th of January 2017. So connecting those two low, we have a bullish trend line. You may also put that trend line on your weekly chart. This one, okay? So there. So apart from the low of last year, 12577, the long-term equilibrium price level at 12448, the current short-term equilibrium price level at 12384. Draw those trend line on your chart. So the price is breaking above, okay, this trend line here. All right, but if it start going down, you want to be aware of the second, okay, trend line. It will become truly bullish if it breaks above, okay, the second red trend line and also above the level of 12577. Hold on, please. I want to put on my chart 12577. It's a very important key level. Hold on, please. Bear with me. That low of 2016 is there now. So, oops, I changed it again. That's not what I want to do. 12577. Go to 0. Good. Okay. Oh, it keeps changing all the time. I don't know why. I want it to be exact level. Somewhere in that zone. And I'll color it into red. So it's there also on the chart. Okay, 12577. So we may say at this point in time, there is a bit of consolidation taking place on the weekly chart between the low of 2016, 12577, and the current short-term equilibrium price level at 12384. Can you see that? It went up, came down, it went up, now it's coming down again. They will try to push it back up again because of this bullish trend line. So if it stays above this bullish trend line, it's indicating to us that the bullish momentum is increasing, which means the previous bearish sentiment is diminishing. All right. So as long as I stay above this bullish trend line, okay, we can take it one step at a time until we go above that critical level at 12577. It must go above that low of 2017. Do not forget also the media line of 2016 at 13285. So you may say to me, Joe, what's the point? You're just telling me about key level. We want to look for trading setup, all right, around those key level, around those trend line, okay, break above, retest, break below, retest, or higher lows, okay. High probability training setups, stochastic pattern, chart pattern are in the vicinity of those, trend line and key levels, especially the green one here, okay. So it's a good start for us, okay. Another thing that we can do, because in order to trade successfully, one must first find, okay, a high probability trading setup. A trading setup that is offering us a low risk for a higher reward. So those trading sector very often will take place around those key levels. So sometimes they may say, Joe, you just telling a key level, but it's the beginning. That's the most important thing we need to know first, because that's where the professional will enter and exit their trade. That's where, as a day trader, swing trader, you will find high probability trading sector. Like I have now on my chart, my pitchfork tool, okay, you can see that it is also highlighted to me that the price is within the boundaries of this pitchfork tool, and it's also on the edge of the pitchfork tool. I can leave those lines on my chart, though I'm on a weekly chart, and I can quickly switch straight away to 30-minute time frame, and here we are. I can still see some of those lines, and I can make my decision on the 30-minute time frame, knowing that those are important key level. So now you can see on the 30-minute time frame is dropping down, so I will prefer it, or if you form a higher low, or pull back to the edge of the pitchfork tool. So the first thing that we are doing, we're starting from the higher time frame, mapping out the chart, and then dropping down to different time frame, okay, and then what are we looking for? We are looking for trading setup on the higher time frames, weekly chart, monthly chart, 3-day chart, all right, and then we implement a top-down trading method to trade it. I don't like very much the daily chart. We can use the daily chart also, all right, okay. You see now, all the lines are here now, okay. So one more time, traders say I repeat myself. I want to repeat myself this time to tell traders that do not engage in trading the British pound Swiss franc unless, okay, you are able to handle it, because it's the beast of the currency market. Just one more time, in case you forget, okay? All right. So That's it really, because we see it from the yearly chart, we see it from the monthly chart. Now we are on the weekly chart. We are now on the edge and also retesting, breaking above the long-term equilibrium price level and retesting here. So if we consider this as a trading setup, because I can tell you now, we have the current market pattern will determine the appropriate strategy that we must deploy. So a consolidation is taking place between 12577 as a day trader. You don't want to forget that. As a swing trader, you don't want to forget that. A consolidation between 12577 and 12384. People are looking for opportunity to sell near the 12577, and as they sell it, it's come near. You can see here this last week it found a support near the 12384. We are now hanging just a little bit below the median line of that channel, horizontal channel. All right, it's still bearish so far until it found a support above the 12448. So this is a bit of angle here. You can see the intersection happening in this zone. So from the weekly chart, okay, we can see it can go up, it can go down. Okay, it's in a tricky place. So let's go to the 2-hour time frame, try to implement a top-down trading method. Here we are on the edge of our pitchfork tool, but on a 2-hour time frame, all right, there is no signal yet. See here? That's what we are talking about. You see here? Anytime you change your time frame, draw your channels and trade on the edge. So what I'm trying to do, here it is. This channel on the 2-hour time frame is a declining channel, and there is no bullish pattern so far. Is it going to form, okay, an inverted head and shoulder chart pattern? It's not yet in place. All right, so the market pattern on the 2-hour time frame is a declining channel. All right, though on the weekly chart we may say that it's looking a little bit bullish on the weekly time frame. The signal time frame for the weekly time frame is 2-hour time frame. There is nothing looking bullish very much here. Maybe when we were here we may say it looks a bit bullish. It's going up. Will it continue? Okay, all right, you see now. All right, either it form an inverted head and shoulder chart pattern on the 2-hour time frame, or preferably come back down completely to form a double bottom chart pattern near the short-term equilibrium price level, which means they sold it at the top of the consolidation, they bring it back to the lower part of the consolidation, and then from here we look again for an opportunity to buy. You see here near this level, it's a beautiful double bottom chart pattern here for consolidation traders. I will buy here. Okay, that's what you are looking for here. As you can see, again in that zone, it formed an inverted head and shoulder chart pattern, a tiny one, a tricky one. Will it do exactly the same thing here? But remember, it's now in a declining channel on the 2-hour time frame. So when the signal is fired on the 2-hour time frame, one will now switch to the 15-minute time frame, okay, to enter the trade. All right. This is about how to trade the beast of the currency market like a pro. All right. So if you have any question or suggestion, put in the comment section, and in due course, all right, I'll be recording another video to answer your specific question. I want to encourage traders that are subscribers to 24 Forex Trader. We want to know whether you like it or dislike it. Doesn't matter. I know sometimes traders are watching video when they did not log into their YouTube account. So if you sometimes you just click, you watch, okay, you are not using your smartphone. If you are using Android, you are already logged in, so you can click like or dislike and comment. Very important for us to know whether they like or dislike, because we are not seeing enough interaction so far at 24 Forex Trader YouTube channel. So when I see a channel like this, I don't post very much on channel when I don't see interaction. So we are encouraging traders to let us know. You like it, mark it up. You dislike it, mark it down. All right. You have any comment, put it there, and so we know what's happening. Which subject trader like, which currency pair trader want. Is it Australian dollar? Okay. You prefer? Is it euro dollar? Mark it up. So we see more of that. So you will see more video popping up in that direction. Otherwise, we don't know where should we push the channel or not. Okay, just a bit of encouragement to traders here. So to summarize this video, I'm going to go back again to highlight those key levels. The first one that we do not want to forget is 12577, the low of 2016. As long as we stay below it, we need, if one is buying, one should be careful. All right. Do not forget the median line 2016, 13285. The first long-term equilibrium price level, 12448, and the current short-term equilibrium price level are 12384. There is a consolidation between 12577 and the 12384. They are selling near the 12577 and they are buying near the 12384. Also, as I mentioned to you on a monthly chart, we see the price structure 1 to 3. Minimum price point is 3. All right. If it dip below the low of this, the third move here, it means that it's going to go down more. All right. So watch out whether it's going to find a support here, and remember the red trend line that I've drawn also on the weekly chart. All right. So anytime you see a trading setup, you will implement a top-down trading method to trade it without ignoring the economy news. If you are trading Forex, all right, I'm going to say it again, all right, and you don't want to pay attention to economy news, trade something else, all right. It's very important to combine the technical analysis and the fundamental. Also put the PFOC tool on your chart, on the weekly chart, as I did on my chart, okay. This is the end of the tutorial about how to trade the beast of the currency market like a pro. If you have any question or suggestion, put in the comment section, and in due course, I will be busy recording another video to answer your specific question. Happy trading to you all, and speak to you soon.